Let's talk about financial threats. Now, how do you assess the financial threats to your organization? Well, from an environmental perspective, you look at the impacts that it could have on your commodity prices, your prices for water, your prices for energy, waste, recycling. Maybe there's going to be new financial threats to your organization through regulation, a carbon tax, or a cap and trade scheme. Maybe the cost of doing business may just increase due to extreme weather and having to carry higher insurance premiums. Or maybe you have to have business redundancy operations put in place to protect yourself. These are all financial threats to your organization. You take, for example, some insurance companies where you take like W.R. Berkley, when they're looking at real estate and whether to not only purchase, but maybe to insure, the investment team considers the exposure to catastrophe at that location. Whether that's hurricane, whether it's blizzard, whether it's tornado, whatever it is, this is a way that businesses are looking at the resiliency strategy and going, how could some of these social environmental things impact our business financially, and how could they hurt us? Institutional investors have come together and have been supporting through the CDP, that they're pushing organizations to address not only climate, but also water and supply chain issues, so social and environmental issues. And they're evaluating companies and asking them questions. What are you doing on these things? And companies that aren't responding are showing lower financial performance than those that are, because it's helping companies uncover where their risks and where their opportunities are from a physical, financial, and brand perspective. This is all part of something as an organization is trying to understand its resiliency strategy to take into account. So how do you assess the financial threats to your organization from a social perspective? Now, social movements can lead to people boycotting products or services which impact the bottom line. If you think about it, divestment movements can attack shareholder value to a company. These are ways that when you're thinking about business resiliency and you're saying, well, I'm not sure how social issues are going to really impact the finances of our corporation. Let me show you a few examples of how that's going to take place. Now, you saw the financial threats to businesses when social unrest happens, and we talked about it from the refugee crisis. But think about from a financial perspective when your brand takes a massive hit. The BP oil example, I think, is a great one, where now obviously they were hit with a $20 billion fine from the federal government for all the spills, and that's no chump change. But they were at the time a business that was about $180 billion in market cap on the stock exchange. However, what really was the threat to them was not the regulatory fine or the government. It was the investors that left. And so you think about it from a social perspective, there was this feeling of a lot of it, institutional investors were looking over their shoulders saying, well, we're not sure we're going to cut our ties with BP yet. But then once a few of them did, then everyone did. And all of a sudden you saw the company lose way more money in terms of market capitalization with investors pulling out than they did from even a $20 billion fine. So this is a way where an environmental issue can also have major social consequences that all can have a very impactful financial hit to your bottom line. That's where organizations need to be thinking about business resiliency.